Dividend and Interest Part 4. Distinction between interim dividend and final dividend. Point source. Interim dividend, it is declared out of profits of the current accounting year. Final dividend, it is declared from different sources like current year's profit, free reserve, capital profits, money provided by government for dividend, etc. 7th, accounting aspect. Interim dividend, it is declared before preparation of the final accounts of the company. Final dividend, it is declared only after the accounts of the year are prepared and finalized. Second, dividend and interest. Meaning, dividend is the return payable to the shareholders of the company for their investment in the share capital. Interest, it is the return payable to the creditors of the company, viz. Debenture holders / deposit holders for the loan given by them to the company. Second, given to whom? Dividend is paid to the member, which is the owners of the company. Interest, it is paid to the creditor of the company. Third, obligation. It is to be paid only when company has made profits, therefore no obligation, compulsion to pay dividend. Interest, it is not linked to the profits of the company. Payment of interest is an obligation and is to be paid by the company compulsorily. Fourth, when payable. Dividend, it is payable when a company earns sufficient profit in a year after fulfilling all obligations. Interest, it is payable every year irrespective of the profits of the company. Fifth, rate. Dividend, it is paid at a fluctuating rate to the equity shareholders since it is linked to the profits of company. Interest, rate of interest is fixed and predetermined at the time of issue of the security. Sixth, resolution. Dividend, payment of final dividend requires a board resolution and an ordinary resolution at the AGM, while interim dividend can be paid by passing only a board resolution. Interest, payment of interest does not require passing of a resolution at any meeting. 7th, accounting treatment / aspect. Dividend is an appropriation of profit. Interest is a charge on profit. Summary. The owners of company, with the shareholders, expect return on their investment in the form of profits of the company. Dividend is the share of profit paid to preference equity shareholders by the company. Dividend can be interim and final. Company has to follow legal provisions with respect to sources of dividend, declaration of dividend and payment of dividend. Interim dividend is a part of final dividend and it is paid before the end of the financial year from the profits earned during the year. Final dividend is paid on actual profits arrived at after closure of books of account at the end of the financial year. The board of directors decide the quantum of dividend. Unpaid / unclaimed dividend arises due to either company is unable to pay it or shareholder is unable to claim it within 30 days of declaration. Interest is an obligation paid by company when it raises borrowings in the form of debentures, deposits and loans. Financial market. Introduction. It is an economy individuals, corporates, government, etc. may have excess funds and may want to invest it. They are called investors. On the other hand, there may be businessmen, corporates, governments, etc. which may need funds who are called as borrowers. The investors lend money to the borrowers through a market called as financial market. Financial market meaning. A financial market is a market where financial assets, which is financial instruments, are exchanged or bought and sold. Financial market helps in mobilization of savings and convert it into investments. Thus, financial market acts as an intermediary between investors and borrowers. Financial instruments are documents in the form of legal agreement between two parties having a monetary value. It represents a financial asset to one party and a financial liability to another party, which is securities like shares, bonds, debentures, derivatives, commercial papers, etc. are financial instruments. Derivatives is a financial instrument which derives its value from an underlying asset. The underlying assets can be shares, stock, bonds, currencies, commodities, etc. Financial markets attract funds from investors and channelizes them to corporations. The term financial market represents the market which raises finance for long term via the capital market and short term via the money market. Functions of financial market. First, transfer of resources. Financial market facilitate the transfer of real economic resources from lenders to ultimate users. Second, productive usage. Financial market allows productive use of the funds. In the hands of the investor, their excess funds would have remained idle. Borrowers use these funds for productive purposes. Third, enhancing income. Financial market allows lenders to earn interest or dividend on their surplus funds, thus leading to the enhancement of the individual and the national income. Fourth, capital formation. Financial market provides a channel through which savings flow to industrial and commercial organizations in the form of capital. This leads to capital formation.